connected. All right. Hey, welcome everybody to the Multifamily Freedom Chasers Financing Zoom. For those of you who do not know me, my name is Shelley Miles. I am a commercial mortgage broker and the co-founder of Adventure Commercial Capital. I just want to say thank you guys for being here, and a couple of things. I wanted to remind you guys that to use this platform to connect with each other. So throw your information in the chat and connect with each other. Throw your markets in the chat and just connect and network. That's what we're here for. And we'll have our information up on the screen. And when JJ logs on, I think he's on a Zoom call, he'll be throwing our information in the chat as well. But with that being said, I'm going to introduce you guys to Jerry Miles, and he will be doing the topic on bridge lending. And those of you who are new and this is your first time, let me know, put a 1 in the chat so we can see. I'll make it easy for you guys. All right, Andrea, Gloria, Judy. All right, good to have you guys here. And Jerry, if you want to go ahead and take it over, I'll let you go. Hopefully we'll stick to our hour. So hopefully we'll do good on that. So
yep, sounds good. Good to see everybody on here. If you want to share your screen, it'll help me know where I'm at, so, and where I need to be. So we usually have JJ on here helping us, but he is, as most people know, he is a YouTuber, and for his birthday, he wanted to join a YouTube creator mentorship. And so he's joined a mentorship, and they have a call right now, but he's going to be on when that call's over. So, yeah, like Shelley said, I'm Jerry Miles. I'm a commercial mortgage broker. You know, and welcome. We've, how many weeks have we been doing these calls now? It's been
since October.
Since October. Okay. We started in October.
And George is new as well. I forgot. And Mal, yeah. Sorry, forgot to mention you guys. Thanks for being here. Go ahead, sorry.
Cool. And you can go ahead and slide on through the
I always have trouble with this.
Slides. So today's agenda, we'll be talking a little bit about the Freedom Chasers ecosystem. We'll give an introduction to ourselves and give you guys a chance to introduce yourselves if you'd like. Main topic is the current debt market, and then we'll be talking about bridge loans today. So the, you know, as everybody knows, the current debt market is, you know, could change by the time we get to that topic tonight. So it's been crazy. So and then we'll do a Q&A at the very end. If you have questions as we're going, you can raise your hand, your virtual hand, or you can ask the question in the chat. We'll try to keep an eye out for the chat. So the Freedom Chasers community like no other. Many of you guys are familiar with it. We're very happy to be a part of the community. You know, started by these three gentlemen over here that are doing the Sunday calls, Marcel, Victor, and Trevor. And we do the activation call on Sunday nights. Usually have a guest speaker, celebrity guest speaker. There's been some big apartment owners and different ones that's been on there. Monday, you know, Peter St. Martin walks you through on how to talk to brokers and does live broker calls, how to communicate effectively. I mean, these guys, I'll tell you, because we're kind of in the same boat, being debt brokers. We get a lot of calls from people that, you know, might just be time wasters for us. You know, that really aren't active buyers. They want to be, maybe they don't know what they're doing or whatever. And these you know, the debt brokers and the you know, sales brokers are you know, they put up feelers and they can pick that out from a mile away if they've been doing it a while. So, you know, Peter, you know, teaches you on those Monday calls how to talk to them, how to build relationships and all those types of things. Tuesday, we do the napkin underwriting with Will, Aldo, and Ed. Will and Aldo are brand new to the leadership team here.
Yeah,
And,
we're happy to have them. We're
yeah,
doing they're kicking butt, I heard.
what's that?
I said they're kicking butt, I heard.
Yeah, they're great additions to the group. And then every other Wednesday we do our financing, and then Victor does advanced underwriting on the off Wednesdays that we're not on. So, and the cool thing about this group, guys, is nobody's paid to be a part of it. You know, a lot of different masterminds and mentorships out there that you can pay $30,000, $40,000, $50,000 for a year's membership. And here in this one, it's free and you get about the same value. So, you know, enjoy it and use it and reach out and become a part of it yourself. So, go ahead and go to the next one. And so, who are the Miles? You see here in the picture is me and Shelley. And then back behind us is JJ and Jordan. That's our two sons. And we have another one, Riley. He's not in the picture. He might even be on the call here. I'm not sure, but he's older and things and out on his own. So, but anyway, we tell you a little bit about us and how we got started. Unless you want to take this one, Shelley. No, yes.
I'll let you go and do it.
Gotcha. Okay. Yeah, we we got started you know, investing in real estate ourselves. We had been running a commercial roofing business. We've been in that business for a long time, pretty much our whole adult lives. And quite a few years ago now, we started investing in real estate, just single family homes, some duplexes, things like that. Our issue we always ran into was finding funding, being self-employed and contractors and that type of thing. Our local banks here weren't real friendly to us as far as giving us money. You know, we had bought our first house and paid cash and just wanted to refinance it after we rehabbed it and had it rented. We wanted to refinance and be able to do it again and keep multiplying. But what we found is, you know, the banks weren't friendly. Then when we went to our, you know, the loan brokers, we found them not to be very honest. And then just, you know, also gouging us on price and fees and that kind of thing too. And we weren't comfortable with it. I told my wife at that time, I said, I think we could do this business better than these guys we've been talking to, and treat people fairly and still make a good business out of it. And so that's what we did 3 years ago. We started Adventure Commercial Capital, you know, and got to open it up. And no sooner than we get it opened up, COVID hit. So we saw COVID right as soon as we started in business, shut down about 8 deals for us. And now we're, you know, we've lived through that one, that storm, and now we're here in the other storm with the inflation and what the Fed's doing and things to the market. So, but we're going to keep going. We're working on growing our business, even in the midst of the storms, and working, expanding ours, and hopefully help you do the same. So, but with Adventure Commercial Capital, we lend on commercial real estate and investment real estate, anything from fix and flips up to your biggest development projects. We have lenders that kind of fit every level of the market and every price range. So here's our contact information here. That's my cell phone number, and then our emails. You know, take a screenshot, write it down, take a picture with your cell phone, whatever it is you want to do. But you don't need to schedule an appointment with us. Call us or send us a text or email whenever. If we're on another line, we'll call you back or whatever. So.
And Jerry's easy to get a hold of, and he's also very easy to talk to. And also, if you guys don't mind taking a screenshot or a, I'll put it on another page here. Oop, 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 oop. If you guys don't mind sharing this and reminding everybody that we are live, that would be great. And I see Aldo just entered the room. If he wants to talk a little bit about his napkin underwriting and how that is going, that would be great. Is Aldo here? Aldo, are you able to hear me? Maybe he's not connected yet.
Yeah.
Okay,
Hey, sorry.
you're
Having
fine.
trouble with the phone. Sorry, well, could you repeat that? I just literally logged on.
Well, we
Yeah,
were just talking about you. And
Uh-oh.
she saw you coming on and she said, why don't we let him talk about his underwriting calls on.
yeah.
Oh,
Let me
yeah.
know. Let me know how your underwriting went last night because I didn't get a chance to jump on. But go ahead. How'd it go?
I think it went great. I think we learned a little bit about the basics of the financial statements we need to underwrite. And then we went through a deal. Had somebody kind of present us a deal, and it was very useful. And I think that there was a lot of value involved, not just from us, but also from the audience. And we were able to figure out if it was a stud or a dud. And so, yeah, if anybody here wants to learn a little bit more about how to be able to analyze a deal quickly before getting into the depths of underwriting, come join us on Tuesday nights at 8 o'clock. Thank you.
Yeah,
Awesome. Thanks, Aldo. Glad it went great for you. Yeah, so you guys connect with him. He'll probably throw his information in the chat and just connect with him, guys. It's an awesome community we're a part of. So, all right, Jerry, go ahead.
All right.
Oh, wait, don't forget to take the shot and share it. Share it away, man. Just share it. Remind everybody that we're alive. Go ahead.
All right. So that's us and who we are. What time we got? It's like 20 after. I probably got time for two people. If you want to raise your hand and tell us who you are and where you're from and just maybe a minute on where you are in your multifamily or real estate investing journey. Feel free to raise your hand and we'll call on you and go ahead and tell us.
Yeah, guys, don't be shy. There's a lot of new people in here, about at least five, I know, new people in here. So just go ahead. Even if you've spoken before in the past, just go ahead and raise your hand and let everybody know.
Yeah, and I will tell you that there is business being done out of just this financing Zoom. There's people here locally that have been doing business together because they met each other on the here locally. We're in the Northern Kentucky, greater Cincinnati area. And so there's people that are doing business with each other here in our local area from meeting each other on the call. So definitely if you're not feeling like talking in person, go ahead and put your stuff in the chat and let everybody know who you are.
All right, we got Lewis.
Lewis. All right, Lewis, how you doing? Oh, I think you're muted.
I'm sorry. Okay, I'm from my phone. Yeah.
Awesome.
Yes.
We can hear you now. Go ahead.
Thank you. Thank you. Thank you for what you bring to the community. I'm Luis. I'm originally from Miami, Florida. Started investing beginning of year 2000. Took a break in 2008 during the crash. So I did survive that. And came back with syndication and started coaching in one of those other community with David Lindahl. And within 8 months, we closed at 100 units. And now we're looking for another one.
Awesome.
Yep.
Awesome. Congratulations, Lewis.
Thank you. Thank you for all these Zooms we all do.
Yeah.
That's what it is. Thank you.
All right. Mrs. Anderson. How do you say your first name?
Lene.
Lene. Okay. I didn't want to mess it up, so.
Is that, oh, everybody does, so. It's all right. Well, I'm from Boynton Beach, Florida, and I own an 8-unit apartment complex in Idaho. I came from Washington State in 2019. I had a couple other rentals and I sold them a couple years ago. And I'm wanting to invest in a 16+ unit on this side of the states.
Awesome.
And preferably out of West Palm Beach County because it's too high. But it's whatever works. I've been running numbers daily. I look at apartment complexes online and stuff and running numbers, and they're still a little too high to suit me.
Yeah.
So, and I don't have a lot of money on a side type of thing. So I'd be looking for partners or whatever. I'd be an active asset manager and whatever.
Awesome.
I'm retired, so I can run and look at places if needed. So that's
Awesome.
me.
Make sure you put your information in the chat. There's people here that will be ready to partner. So.
All right.
Yep.
Thank you. Thank you very much.
Yeah, for
Thanks.
sure. Glad you're here.
All right, Jerry, go ahead. One more.
Yeah, one more. Mario.
Can you hear me?
I
All
can
right,
hear
there
you.
you go. How you doing? I'm out of New York, so you can tell from my accent how you doing, kind of guys. So thank you, Jerry and Shelley. I'm a developer, so what I do is I build. We take raw land and make it fully entitled, and either sell it off to the boys to build, or we JV on and build her together.
Okay.
So I've got into, my partner and I are getting into the multifamily arena because I got tired of buying and fixing and flipping instead of buying and holding. So I'm a little behind in the age at 62, but that's my experience as a former mortgage banker and that. So I'm looking to acquire 1,000 doors within this year, in anywhere in this different states. And, you know, I like to learn from people who actually been doing it. You know, you can learn from my building experience and developing, and I can learn from multifamily from you two and other people. So that's what I'm looking to do.
Awesome. Glad you're here, Mario. All right. Go ahead and slide us down to the
All right. Thanks for sharing, guys.
yeah, thanks everybody. All right. So getting started with the current debt market. I'm sure everybody has heard the news by now. We had another quarter point rate hike today. You know, who knows when that's going to end. You know, it seems like just about every other day the news cycle changes. There'll be good news and then bad news, and you know, I don't, you know, don't quite know what to make of it, other than it's really messing up a lot of multifamily owners right now. So, you know, I think eventually there's going to be some real deals hitting the market. You know, but right now it's just we're not to that point yet. You know, it's a long cycle. You know, for the owners of these properties to come to the realization that they're not going to get the price that they're expecting to get out of their properties. You know, so, you know, maybe they were planning to sell at a 4 cap or a 5 cap. You know, now it's a 6, 7, or 8 cap that they're going to have to sell at. And it's just, it's not comforting to them. You know, they're going to lose money on their sale if they have to sell. I mean, a lot of them are coming up due on you know, their fixed rates are coming due, and they're gonna go they're gonna go adjustable. We're part of the Grant Cardone Real Estate Club. There's a guy on there that was talking again this morning. We do a Zoom every Wednesday at noon, and there's a guy on there that's got 24 complexes, and he was telling the group that he's pulling money out of his pocket to do refis because there's no equity left in the properties, and the loans are going adjustable. Now this guy, he said he's going to hopefully be able to keep all of his properties. That, you know, there is a fear of losing one or two of them, just because he's not going to be able to keep up. But he is a big time owner. And so I'll tell you that there's going to be a lot of people that don't have that same those same resources this guy does. So they're going to be hurting. You know, so it's important when you guys are looking at the way the market's running. If you're looking at deals and you're calling about deals to the brokers, get down to the nitty gritty on why is this guy selling. You know, they're going to give you some bogus or some, you know, kind of basic thing of, oh, well, they're tired of running the property, or, you know, something along those lines. Anybody that is able to not sell and keep their property right now is going to do that. I mean, this is not the time to sell. And so somebody that's selling, they're either just putting it out there and they're not really a seller, or they really need to sell. And when you find out they really need to sell, you know, just understand what that means, that they're losing money every month, or they're coming up to the time when they're going to start losing money every month. So that time's coming for a lot of people. I've heard numbers that it's in the trillions of debt that's going to be coming due in the next year or two. That you know, people had 3, 5, 6, 7 year terms on their loans, and they're going to go adjustable, and that's going to hurt a lot of people. You know, and kind of a side note to that as well, what inflation is doing to owners in certain states. There was a different owner. I don't want to give names of people out because our group is a private group. But there was another owner that was on there saying that he now has insurance quotes. He was paying a few years ago $700 a door for insurance for his complexes, and here just this year coming is this year's kicking off. He's got new quotes, and he's at like $2,400 a door for insurance, and so that's killing NOIs as well. So you kind of multiply that with, now we've got adjustable rates that are going and going to hurt people. Now their NOI is not as high because their insurance is so much higher. Taxes have gotten higher, and it's kind of a bad situation all around. And I'm not saying that just to be doom and gloom, because, you know, where there's people that are going through these things, it creates opportunity for others. So it's, you know, it could be a good thing if you're a buyer, you know, and you know, it's just the way the market is right now. There's not a lot of trading going on and things because of it as well. So, but where are the current rates? I mean, the Fed rate went, you know, between 4.75 and 5 today. The SOFR rate 4.55, and the 10-year Treasury 3.56. So rates are up. What's that mean? We kind of talked about that already. And, you know, preparing for this week, I've got 9 or 10 different bridge lenders that I contacted this week and talked to, just to talk to them and personally to find out exactly what they're looking for right now in this current market on deals. You know, and some of them are really optimistic about what's going on in the future. Others not so much. You know, one of them has got a big fund, and he's got, you know, kind of bottomless pit of money to lend out on bridge debt. But he also does, he's got a program where he works with brokers like us, and he goes through credit unions and, you know, finds, you know, bank financing for properties. And he said that most of his credit unions aren't answering their calls now. When he's got deals that he's wanting to find lending, you know, funding for, the credit unions, you know, can be a real good source. You know, when you're looking at credit unions compared to like Freddie and Fanny, you know, sometimes you can get the same type of rates and terms. They don't have the prepayment penalties and things. So, I mean, they're good sources, but this guy said most of them are kind of backing out and not even answering their phone right now when they know it's a commercial real estate deal. So, where some are falling away, others are going to take up their place. And that's what we're doing in our market. We're putting more money out for advertising, and we're pushing harder than ever before to grow our business and to just take market share from people that are maybe scared and trying to hoard money and save money. So, and you can kind of look at that as a way when you're buying as well, be out there, buy when there's blood in the streets. Even if it's your own blood, is what Grant is always saying on our calls. So I think it was a Rockefeller quote originally, but or one of them older guys. But go ahead and change the slides there. We'll get into, Freddie and Fanny. There's been a lot of years. By the time March and April, May roll around, Freddie and Fanny have lent all their money out already for the year. All their money that they've had set aside. That was not the case last year because of the interest rate hikes that we went through, and they didn't lend all the money out they were supposed to. And we're kind of running into that situation this year, but they're really trying to lend on the 5 to 50 unit space. At the beginning of February, they said, we're not raising rates the whole month of February. And by the end of February, they'd raised rates 3 times. So, if you're looking at Freddie and Fanny debt, you're wanting to underwrite apartment buildings, just kind of a good gauge. Look at the 10-year treasury. You're going to be like 1.5 to 2.5, kind of that range over top of the 10-year treasury rate that day. And that's where your rates would come in if you were going after something that day or locking in a rate that day, and the way it's moving. I mean, we're moving a quarter, half, sometimes 0.75% back and forth on that 10-year treasury and the swaps and all that. It's, hard to keep up with, but, I would say underwrite heavy. So right now, I mean, the 10-year treasury is like 3.56. So, I mean, I would say don't be underwriting to 5. I would underwrite to 5.5 to 5 3/4 just to be safe. Maybe 6. So just to let you know, go ahead and move on. We'll get on with the bridge funding. Bridge loans, we haven't really talked about them on these calls just yet. It's a big market, and there's a lot of different things that call themselves bridge loans. I mean, bridge loans are short-term loans, also known as gap loans, swing financing, hard money, private money loans. Hard money loans kind of gets a bad rap because of, there's been some shysters throughout history that they say, hey, we got hard money, things like that. The same idea, bridge loans, hard money, private money, it's all the same idea. Just depending on where it comes from or how they want to kind of sell their product is where you get the name from. When you're going for a fix and flip loan on just a regular house, that's a bridge loan. So used for a lot of different things. If you have a property that needs to sell right now, you don't have time to wait for underwriting on getting money from a bank, an insurance company, or agency debt. So that they with bridge loans. I mean, we've got some lenders that can close in 7 to 10 days. So when you get under those time constraints though, and they know that you're under those, you're not going to get the most favorable rates. But we can get them closed, and we can take care of it and make sure the deal's done. So, giving you time to stabilize assets. When you're going after Freddie and Fanny debt, you need a 90% or better occupancy, for the past 3 months on average or better. So stabilizing an asset, like if you don't have the occupancy you need and things, we can do a bridge loan for a year, 6 months, 2 years, just to give you a chance to stabilize the asset. If you have construction or rehab or, any type of building loan, is just a bridge loan, and they have, each one has their own terms and their own ways they like to structure things. So go ahead and go to the next one. So what are bridge lenders looking at? I'll tell you guys, I got a call from somebody today. All commercial real estate, or I got a call from somebody 2 days ago, sorry. All commercial real estate, I'll tell you, is, the value, what the bank looks at and everything else is based on the value of the property, the income of the property, or the potential of the property, right? But they're all going to look at you as well. All right. They're going to look at the borrower, make sure the borrower can perform, can do all the things they need to do. I had a call from somebody, this week, and they said, "Hey, I'm looking for somebody that can lend on real estate based on what the property does." So, well, great, you've got us. That's what we do. And so, he's telling me about the deal. It's a very, very heavy construction project. I have bridge lenders that love a lot of construction, heavy construction. And so my question to him, my first question is, what kind of experience do you have in this type of construction project? And well, he said, "What do you mean? What kind of experience do I have?" He said, "I thought you look at the property and base it on the property." And I said, "Well, we do." I said, "But that property is only as good as the person operating it. Especially if you have a lot of construction or, something along those lines." It was like $2 or $3 million in construction on a apartment building. And it wasn't a big apartment building. And so anyway, he hung up mad because I didn't have, the product he thought that we had. He was wanting something that was, I guess he just wanted us to send him a check for $3 million so he could rehab this property. But, I'll tell you, I'm telling that story just to kind of go into, lenders in the bridge space are looking for exit strategies. They're looking for the best case and the worst case scenarios. So can the borrower perform? And then, and when they're looking at can the borrower perform, they're looking at the experience of the borrower and liquidity. So those two things have to be there. Especially when you have higher, construction costs and things like that. It's going to be hard to convince a lender that you can take care of a $3 or $4 or $5 million construction project or rehab project if you've never done one. And that's where a good partner might come in. So and then next, once you get done looking at the borrower, can the property perform? So will the property, maybe they're looking to turn around and sell the property after they complete and get everything ready, or maybe they're wanting to refinance and hold on to it. Either way, they're going to be looking, will the property qualify for financing once it's stabilized? And, the reason they're looking at that is they want to know that once this project's done, is someone going to be able to buy it, or are you going to be able to turn around and refinance it? So they're going to look at your net worth. They're going to look at your liquidity. They're going to look at all of these things because they need to know that their exit strategy is there, whether it's a sale. And even if it is going to be a sale, they're going to want to look at what you are personally there holding as far as net worth and things, because they want to know that if it's a worst case, you're going to be able to qualify for a refi. So, different lenders, have different deals that they're looking for. And that's what I was looking at this week when I was talking to the different ones, because, let's say one day this lender is looking to, lend on storage units, and they're just looking for people that are wanting to buy storage units, turn management around, and those types of things. and then maybe come back and refi. Well, today they're looking for that. Next week they might have already had 4 or 5 of those deals in the works. Well, now they're not looking for those deals. They're looking for, they don't have any, let's say, hotels in their books, and they want to get some hotels on their books. So what they're looking for is always changing, and it's always evolving. So go ahead and hit the next slide. So rates and terms from bridge lenders. This is kind of a loaded question. We have some bridge lenders that are really competitive when it comes to cost and things. And then we have some that are really expensive, and and they have their own things that they look at. I saw Peter St. Martin was on here, and he reached out to me with a deal. We're both lenders, and he reached out to see if I had a option for a deal. The deal was under $1 million. So generally loan amounts need to be over $1 million. This one was under, the loan amount was going to be under $1 million. And he kind of told me a story of what was going on. I do have one lender that will lend under $1 million on bridge lending on commercial. Now we have some that do the fix and flip space and the 1-to-4s and all that, and they will lend under the $1 million. But when we're looking at commercial real estate, I have one that'll lend under $1 million. But after hearing what he had on his stuff, I was like, I don't have anybody for it, because this one lender knows that he's the only guy that will lend on these types of assets. And the last couple quotes I've gotten from him have been 14 to 15%. And then he wants 6 points to close it himself. And so, we can, with guys like this, we can get just about anything funded. But when you bring in nice deals, when you bring in, a lot of our bridge guys when you're looking for the better terms, they're looking for apartment buildings that you are looking at, and it's a C property and you're wanting to bring it to a B, or it's a B and you're wanting to bring it to an A, or management has been bad, so the vacancy's low. And so all these things are what they're looking to lend on. They're not, just looking kind of willy-nilly at, hey, this guy's got an idea and he wants to do it. No, they've got things already. They know what a good business plan is when they see it. And that's what they're looking for. So generally loan amounts over $1 million. We've got guys that go 1 to 10. We've got guys that go 1 to 30. We've got a guy that does development deals, and he starts out at 25 million, and he funded a big development project in Dubai recently for over 2 billion. So we didn't fund that one through our brokerage, but he's a funding partner of ours that we work through. So, but we've got kind of a whole gambit of bridge lenders that we can go to. So terms generally 12 to 36 months. We can do longer ones, we can do shorter ones, but that's kind of a general rule. So we've got each one of the lenders kind of has their own ways of looking at the terms and rates. Some of them like SOFR, or 3.5, 4 over SOFR, whatever SOFR is at closing, that's where their rate will be. Or 2.25 to 3 over the prime rate. And like I said, the more risky deals can get really pricey. And unless it's something that somebody is just got to have no matter the cost, I don't even show them. So I just tell you, hey, we don't have nothing for that, unless I know that they're ready for those big numbers on the fees and things. So go back to that last one just for a second. Something else, I don't know if everybody understands, when bridge lenders are looking at a deal, let's say you're borrowing $1 million, and let's, over 3.5 over SOFR. What was SOFR today was 3.5, or I don't know, somewhere in there, 3.6 or 3.5, something like that. So you're going to be at like a 7% to 7.5% rate on on a bridge loan. So let's say you got a 7% rate on a bridge loan. That is not an amortized loan. So that's 7%. If you're borrowing $1 million, what is that? 7% would be 70,000 on $1 million every year. That's what your payments would be in a year on $1 million loan. You'd end up paying $70,000 through the year. So what, a little less than, it'd be less than 10, a little more than 5,000 a month or so on a payment. So just kind of give you a kind of a way they look at the loans and they view the loans and that when you're doing a bridge loan. So you can go on to the next slide. So when you call us, needed for a quote, if it's a multifamily or pretty much any commercial real estate, we're going to need T12s, rent roll, and OM if you have it. Summary of what you plan to do with the property. As you get closer and you get an LOI accepted, we're going under contract, all those types of things. I'm going to push you for the schedule of real estate owned, the SREO, because without that we can't proceed. And just kind of a general rule with commercial real estate, you need a net worth equal to or greater than the value of the real estate, or I'm sorry, the equal or greater to than the loan amount. And personal financial statement is something else we'll need. So right off the bat, to get you a quote, you tell me, hey, I know you from the group, or I know you from the real estate club, one of those things. I'll give you a quote because I know there's people in here that you can partner with. So it's important, if you don't have the SREO and the PFS and things yet to be able to buy these bigger deals, you need to find partners that can. So that's just a huge important thing. And I can't stress that enough, to start finding these partners now, these strategic partners, to be able to grow now before you get into a situation where you're really pressed for time on a deal or something. So oh, and on the bridge debt, since we're talking about bridge debt, it's very important, if you're sending me something that we're going to be needing to get bridge debt on, a T12 and a rent roll will help if it has some occupancy and things. But the most important thing, if we're looking at bridge debt, is I need to see what you guys are planning to do with the property. So your story, your pro forma, what you plan to spend, what you plan to do to get the asset to where it needs to be to qualify for long-term financing. I need all that before I can take it to a lender and get a solid quote on something like that. So good. All right, so we're open for Q&A if anybody has any questions.
Also, Lewis is a great person to connect with. He is active 24/7. A good guy. Right, Lewis?
So I didn't have a voice 2 days ago. I was sick and lost my voice, and I'm about there again. I feel like it's I've done a lot of talking today, so but I'm here to answer questions. We'll go for about another 5-10 minutes. If anybody's got any questions, feel free to raise your hand or put them in the chat. So that's good. Oh, I see. Oh, okay. Here's some questions.
Hey, Jerry.
Ashley, how are you?
Good. How are you?
Good. Good to see you.
Likewise. And thank you for the information.
Yeah.
I actually missed one thing. Can you explain the schedule of real estate owned
Yeah.
again?
Yeah, when a lender's looking at you as a potential borrower, they're going to look at your PFS or your personal financial statement. They're
Mhm.
also going to want to see your schedule of real estate owned, or you'll call it an SREO.
Oh, like
And
holdings, what we have?
Yeah, they want to
currently?
see how many properties that you're a part of. If you're an LP on a bunch, or if you're a GP on some, or if you just have single families, whatever it is that you own,
Got
put it on that list. And they want to see it because they want to see what experience you have. They're going to underwrite all those things on you as well. So, all right. Yeah.
Oh, thank you.
Mario.
Yeah, again, excellent information I learned, so that's always good. Question is like the same thing as a developer when I'm building a 55 and over, the person coming in, the builder has to have that in his portfolio or has to bring a player in because and that's so important. So my question to you is on certain projects, I'm a big player in recommending JVing. So if I haven't done something, I'm gonna have somebody who has that experience. Because not only you look at me, you look at, can I and the project pay you back?
That's it.
So, and so do you do that a lot based upon if I have in my portfolio or if I have in my, like a business group of players on it? Hey, this guy generated hotels. This guy did 40Bs. This guy did 55 and overs. So that's what you would recommend when you lend to us, that our team can actually not only take the deal down, build it, or whatever, add value to it and pay you back.
That's it.
That was a good, okay.
Yep.
And do you ever base upon assets? I mean, like if you have a bunch of assets worth several million, just to clarify, you said when we buy, or let's say I need $100 million from you, I need to have an asset or a collateralization of 200 million. Is that the numbers or
No. Yeah, if you're borrowing 100 million, it's a $200 million project, and you're borrowing 100 million.
Yeah,
You and your partners, it can be a combined net worth of partners or one person, however it works out, would need to have a minimum of that 100 million of the loan amount.
that's why when I bring in a billionaire with me, one of my billionaire partners, that we're covered.
Yeah. Yep.
Got it. Okay.
Yeah, one guy can do a whole bunch if he's got $1 billion net worth. So.
Oh yeah. Okay. Got it. I just want to make sure I'm playing in the right thing to make sure you guys will win because we bring the right people together. Okay.
Yeah,
Thanks.
for sure. Awesome. Glad you're here. All right. Do you want to go on to the next slide there? I think it's
Is there any more question? I want to say one thing. Ashley, your video was great on Sunday that you did. It was awesome. I loved it.
Thank you. I would love to do one tonight, but I think it's all scrambled with the information.
Oh, you're fine. You're fine. Another time.
So technical with bridge loan. I don't think that like retail investors really want, especially over $1 million at this point, but I can certainly put it out there.
Yeah. Yeah.
Hey,
So,
hi, I have a question. Can I cut in real quick?
Yeah, go
What do you
ahead.
guys feel? How do you guys feel about lending for mobile home parks?
We have lenders that do mobile home parks.
Oh, you do?
who's
Okay.
talking?
This is George. I'm sorry. I can't. My video can't.
Oh, okay. Yeah.
I'm kind of iffy right now on the Wi-Fi. Yeah, for mobile home parks, I'm entering that space as well as well as small multifamily.
Okay.
But I wanted to ask you: is it the same rules apply? You have to get someone that has equal value of what you're going to loan on mobile home parks. Same thing as the standard multifamily apartment complex.
Yep. That's
Same
it.
thing. Okay. All right. Yeah, that was a question I had.
Yeah, and it's pretty much that kind of all across the board when it comes to commercial real estate. There are some exceptions when you get into like the local banks and the credit unions. But they're still, kind of set that same way. But, if you have a relationship with a bank and you have a, I don't want to throw numbers out there, but if you're close, things like that. I mean, a lot of these things I say on the commercial real estate end are kind of fluid. Even when it comes to like agency debt. So if somebody, is just barely meeting the net worth requirement, they're going to be a little tougher on the deal and making sure that the deal has all the I's dotted and the T's crossed. If you have somebody that has a lot higher net worth than the loan amount, you're going to be able to be a little more, they're going to be a little easier underwriting the deal, because you have some cushion there. So.
Sounds good. All right. Well,
Yeah.
thank you very much.
Yeah, thank you. Glad you're here. So you can go on to the next page, everybody. And I'll say real quick also, Shelley's been working a lot on our website. She's been doing a bunch on our website. How long do you think before all that's complete? I know that you've been doing a lot, putting a lot of new information and things on there.
It should be completed by hopefully next week.
Okay,
And next week. I need it up and running by April 1st. So,
gotcha. Okay.
I mean,
Yeah,
our website is still up and running. It's active, but I'm kind of like switching around some stuff and it's going to be pretty. So,
So you guys will have to check it out.
I'm just
Maybe-
doing the content. Somebody else is running the website. So,
Yeah, we have somebody that runs it, but she's coming up with a lot of new content and things. So, but yeah. And yeah, right here, the next topic we're going to be talking about, wanting to change things up a little bit and not just always, I mean, I know everybody on here is investors, so everybody loves multifamily, but if you're an investor, you're always looking for any type of commercial real estate or an investment real estate, and everybody likes real estate that makes money. So we'll be talking next week on buying commercial real estate with SBA loans, or not next week, but the next Zoom that we do. It'll be 2 Wednesdays from now. And then JJ is going to host and present the next week's. I'll do the current debt market on the 19th, but he is actually going to be going through some of our fix and flip products. And so, I know that these aren't, multifamily topics, but they're real estate topics. So I thought maybe everybody would get like a little bit of a change and seeing some other options. So.
yeah. So the next topic will be how to buy commercial real estate with SBA loans. And that will be on April 5th. And then the one after that will be fix and flip loans presented by JJ Miles, which he's still not on here.
Yeah, he's 17 and he is getting ready to be a senior next year, but he's trying to allow his mom to let him graduate early because he wants to go to work. So he's already got jobs doing YouTube consulting with other people and building his YouTube channel. And so he's been doing good.
Yeah.
And we want to keep him around and running in our business. So, and doing things with us. So we're going to allow him to present and do some education for you guys in two calls from now. So
Yeah, that will be April 19th. So yeah. And
All
then
right.
I shared the multifamily freedom chases Zoom link. Sorry, not Zoom link, Facebook link on the chat just now. If you guys want to grab that, for those of you who are new, just go ahead and click on that and join the Freedom Chasers. We've got the 3 guys that started everything, Marcel, Victor, and Trevor. They are awesome. They get us activated on Sunday. Then we have the one and only Peter.
I see Peter on here. If you want to talk about your broker calls, we was talking about that at the beginning, Peter, if you want to say something about it.
Yeah, let's do that. Peter, where's he at? Oh, there he is. Can't hear you.
Sorry.
Oh, you're good.
Come join
Good to
us
see you.
on Sunday night for the activation Zoom, and then we take action on Monday, 2 o'clock Eastern time. I know there's a lot of you folks that usually come every week and would love to see you on Monday. Love to see some of you haven't been in a while. Come on back, bring a friend. Let's make some phone calls. Let's make some connections. So looking forward to it. It's a great way to start the week, to start to build those relationships with brokers that we're going to need. We may not need them right now, but we're going to need them in the future for sure. And we're talking a lot about other strategies as well. Right now in the market cycle that we're in, I think the best strategy is to reach out directly to owners. But we still need to be developing those broker relationships. And that's what, that's what this community is all about too, right? We want you guys networking with each other. Make sure you're saving the chat. If you don't know how to do that, down at the bottom of the chat, there's 3 little horizontal dots to the right of the smiley face. Click on that and save the chat so you can go back through it and, make connections with people, text them, connect with them on Facebook, send them an Instagram message, whatever. Have coffee outside these meetings with your local people. Have one-on-one Zooms. In fact, that's how Aldo and I got to know each other a little bit. We did a Zoom one Saturday morning at 7 o'clock. And I knew he was somebody I wanted to connect with, and now he stepped up as a leader in this group. So you got to have those connections outside of these Zoom calls. So we encourage you guys to do that. And I look forward to seeing you guys on Monday. And I'll be in, looks like I'm going to be in South Florida this weekend for Grant Cardone's event. So mostly to network with people that I've already met who will be there. So if anybody's in that area, you want to reach out to me and let me know that you're there. I'd love to connect with you.
Awesome, Peter. That's cool that you're going.
And if
So
you're
I'll
anywhere
visit.
between Atlanta and South Florida, let me know. I'll stop by. We'll have lunch.
Yeah.
That's great.
Awesome. I'm missing this one because we got the kids are in a play this weekend, and we also have a basketball tournament this weekend.
I understand all about the kids stuff. In fact, I got
yeah.
some of that I got to jump to right now. So
Okay.
I'm going to hop off, but great Zoom again, guys. And
Yeah.
can't wait till the next one. Can't wait till
For being on
JJ's.
here.
That's awesome. Glad to hear about that.
Yeah.
Thanks,
See you
Peter.
guys.
Thanks.
You guys make sure and connect with him. He's gonna put his information. I'm sure he already did, but I've been on these broker calls before, and to see it live is awesome, man. It's pretty good. And then we have the new Will and Aldo, who is presenting with Edward. They're doing their napkin underwriting, and then you have yours truly and Jerry Miles on every other Wednesday. And then next Wednesday, you're going to have Victor with his advanced underwriting. But here is our information. And again, I already put the Freedom Chasers in the Facebook link in the chat. Go ahead and click on that. If you haven't joined them yet, go ahead and join. There's so many free things, free Zoom calls and connections, and just people are putting their deals on there to get them to find investors. It's great stuff. Here's our information again. Just go ahead and take a screenshot of that or take that information down, and yeah, Jerry.
All right, cool. Well, thanks everybody for being here, and we're going to call it a night. You all have a good evening, rest of the evening. If you're on the West Coast, have a good rest of the afternoon.
Thank you guys for joining.
Thank you, everybody.
Yeah, thank you.
Thank you.
everyone. Thank you so much.